Millennial earnings season gets underway. Here's what you need to know before the bell. This week kicks off earnings season, starting with the big banks. So a couple of things we're going to see right away are, really, is there more stress in the banking sector coming, or were the events in the banks previously now over with? We'll get a first good look at that. Also, we'll pay close attention to lending standards and loan loss reserves for the banks, because that'll tell us if they are getting more concerned about delinquencies and defaults, which are typically predecessors of a recessionary economy. So again, we'll keep a close watch on that. But importantly, as we start looking into earnings, this is what we call millennial earnings season. As you see by this chart, going back to February of last year, the earnings for the first quarter have dropped markedly since then, from a peak of about $225 to $172 a share today. That certainly lowers the bar for companies to get over that. And of course, we'll get a number of companies that are beating estimates. Really, just how good is that beat? But this is why we call it millennial earnings season, because everybody gets a trophy, because we'll have a high beat rate on very much lowered earnings estimates. Now, this is going to help give some support to the markets. And as we've talked about here recently, the market continues to trade in a fairly defined channel, really kind of going back to December of last year. Markets really haven't gone anywhere, just this kind of sideways trading pattern. Again, this is actually kind of bullish. This is a consolidation pattern. Markets are holding up despite a plethora of bad news, including a weakening economic environment, banking issues, the Fed hiking rates, of course, concerns over inflation, and yet markets continue to hold up here fairly well in light of this fact that earnings estimates continue to decline. We've had an earnings recession now going on for the last couple of quarters, and markets are still holding up okay. Now, again, that's bullish, and again, if markets can make a move above this kind of consolidation pattern, that certainly suggests markets can move higher from here. A lot of that will depend on what happens in earnings, of course, over the next several weeks as we get into the heart of earnings season by the end of this month. So markets will start to reflect what is currently looking at earnings. Of course, what is going to be important for stock prices is not just what the companies announce in terms of earnings. Yeah, they're going to beat these lower estimates, but what do they say about the future? What does it look like in terms of their expectations for increasing production, hiring employees? What are their expectations on continued sales growth? Those type of things. That's what's going to drive market prices here over the next month or so. So be prepared. Again, later this week, we'll start to see that. We also have inflation data coming out this week as well, which will be setting up for the next Fed meeting. Will the Fed hike rates, or will they pause? That's going to be the big question. We'll see that with inflation this week. Anyway, lots of stuff happening. I'm your host, Lance Roberts, and that's what you need to know before the bell.